Tesla has become the world's most valuable car maker after surpassing Japan's Toyota during trading on Wall Street on Wednesday. That's despite the fact that the electric car maker sells far fewer vehicles than the other big players in the sector. Well, industry experts, meanwhile, are warning of a cruel summer for car sales after manufacturers reported a sharp drop during lockdown around the world. For more, we're joined on set by business editor Stephen Carroll. Stephen, explain a little bit more. How did Tesla snatch this title?
So market valuation is based on the value of a company's shares all added together. And Tesla's shares really have been a rising star in the industry over the past few months and even well into last year as well. So its stock price is up by fivefold in the past year. A year ago, it was around $230 a barrel, closed on Wall Street yesterday at over $1,100 a barrel. And that brought its market capitalization to over $207 billion, pushing it past Toyota, which was until then the world's most valuable car maker, which is just under 200 billion. General Motors, for comparison, worth an awful lot less than that. Now, strictly speaking, if you include the debts that these companies have, Toyota is still slightly ahead of Tesla, but it's still a big milestone for Elon Musk's company. This is despite the fact that Tesla has only recently started to turn a profit. It's only, in fact, if it turns a profit in the period from April to June, it will have had its first full year of profitability since it was created. Tesla's shares have been continuing to rise this year, and that's as established car makers have seen their shares plummet. Toyota's shares, for example, down 11% since the start of this year. So a really big change, a really big contrast between those two. But if you look at how many cars the car makers are actually selling, you'll see that Tesla is a relatively small player on a global scale. In the first 3 months of this year, Tesla delivered just under 90,000 cars to customers. That's still up 40% on the same period last year, but Toyota's figures are over 2 million cars over the same period. So it really is very small, and General Motors over 1 million. So really quite a big difference between the size of those companies. But if you look at the trajectory, Tesla's sales are growing, General Motors and Toyota's were falling. So it looks like investors are looking at potential future growth rather than necessarily what's happening right now.
So do they see then that people are switching to electric cars?
So electric car sales have been rising pretty steadily. The International Energy Agency says that globally, electric car sales were up by 40% in 2019. But they're still a very small part of the market. Overall, 2.6% of global car sales. So still a very small part of the sector, but one that is growing. And this year is expected to be a bad year for the car industry. The IEA says that car sales are expected to fall by 15%, but electric car sales are expected to remain stable. So they're proving much more resilient as well in these very confusing times for the global economy. Here in France, electric and hybrid car sales made up around 9% of overall car sales in the first 3 months of this year. That's being helped by a French government bonus, which is now worth up to €7,000 for people who are buying an electric car. I was talking to the CEO of Citroën, the French car maker, just earlier this week about this, and he says they're expecting electric and hybrid cars to make up 10% of their sales by next year. But he said the key thing that will drive these sales are both incentives, like the French government grant, and infrastructure when it comes to charging points. And that's the pinch point for a lot of people when it comes to buying an electric car, is to make sure that they can find somewhere to charge it in all of the places they'll want to drive it.